My name is Paul Barron. Welcome back into Tech Path. I want to start off with a couple of points here in terms of getting the approval today, most likely coming around 5 p.m. Eastern time. This came in from Solana Floor, just in from the CBOE exchange, files request for acceleration with the SEC for Fidelity, Van Eck, 21 shares, and Franklin Templeton. Basically what this says is it says, be advised, the exchange itself has received an application dated today above reference issuer to say, we want to facilitate a timely listing so we can accelerate these onto the market. So they're wanting to get things going. If you're going to go ahead and approve it, you might as well just give it an accelerated so we can get this done and it's ready for trading tomorrow, which is really where it boils down to. Other tweets out there that are hitting right now, this of course is Mr. Jamie Dimon coming in and kind of putting a little bit of dousing in the fire, but he says some interesting things on this clip. Listen into what he had to say.
There's also new regulation coming on Bitcoin, and you famously said recently that you would shut it down if you were in government. Can you give us more clarity on that?
What I've always said is that Bitcoin doesn't have value, and I don't care what people do with Bitcoin, but what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing. It's not people just buying and selling Bitcoin. There's no value to, if you're buying and selling Bitcoin.
It's been a rough year. There's also new.
All right. So, Dimon hasn't changed his position in terms of use case. I think you could consider the US dollar as a use case, much like that. It really is about speculation, I think, overall and long-term value. And especially when you look at a reserve and something that you're saying, hey, this is a store of value for me. This is something I'm going to look at. I think it's going to play out quite a bit differently here in the coming months for sure. In terms of where the market is going to address Dimon's concern, I think the market is going to say, yeah, we like it as a store of value, and we're going to go that direction with these ETFs. Of course, here's where we're talking about fees. This is James Safer talking about the ETF fees just keep dropping. BlackRock now just cut fees on the spot down to 0.25 and a 0.12 on the first 5 billion. 5 billion. And they're really going after the jugular, looking to crush the others if they ever were born. Just brutal. Ark also cut fees down to 0.21. Bitwise cut down to 2.0. So, and if you look at the scenario, if you look right here on iShares, it's got it at 0.20 right now versus what the statement earlier was at 0.25. So it's very possible we could see even fees down on BlackRock as low as maybe 0.10 or 0. Can you imagine that? An ETF going out and launching in this. Now, a lot happening throughout the day around this because it really gets into that first mover position. This is something that everybody's been kind of looking at. Some people think Coinbase kind of won this Bitcoin ETF because they're using custody. Some people will say, no, it's Fidelity because they're going to custody themselves. This tells me that the big winner, and I would agree with James here, is that this means lower fees for everybody. It's only going to help consumers overall and get exposure because this is going to help other people starting to take a look at something that, hey, the fees are almost nothing. It's crazy for us not to get into it. Put a little bit of our net worth in there, our wealth, and I think that's going to be interesting for these investment advisors going forward. Here's how the slash fees for spot Bitcoin ETFs compare to traditional funds. That's the interesting thing too here, is that traditional funds, if you go down here and look at a few, they're lower than expected, but profitable initially. They're not necessarily as low as some of the other top traded ETFs. So that's one thing to compare to when they look at equity and bonds. But you also can compare this to gold here in a second. I'll show you that. But SPY fees are cheaper also for proposed spot Bitcoin ETFs. That was at 0.9. Vanguard's total stock market ETF right now, including the Schwab Broad Market, also offer fees of 0.3. So these are considerably lower. And then you look at Bitcoin versus other commodities. So let's take a look at gold. Gold sitting here on the largest gold ETF out there, 57 bill. This, of course, has a 0.4 fee. So this will be interesting because these are still considerably higher. Remember, these are only short-term potentials at the 0 or at these reduced fees. And then as you get further in, because remember, these are going to be large market cap investors coming in. So very interesting times right now playing into this. This is something I did not know. This was Eric Balchunas hitting on this, is they won't, and this is reference to potential cutting fees. And ETFs only cut fees, never raise them. So advisors would flip out if they did, and their brands would be stained. So This is something I did not know, is that they can't stay competitive in this. So it really is kind of one of those things where if you go out at this rate, that's going to be the rate. But to their point is that these early entries, the ones that take most of the market share, are the ones that win. It's kind of like with what happened with the gold ETF, is you only have a handful of winners there. I want to play a couple of clips here for you. This is getting into liquidity and how this may play into the market. Listen in.
Yeah, I think, first of all, there's only room for one liquidity king. It's just the way it goes. There's going to be one ETF that like just gets most of the organic volume. And once that one is sort of known as the one, more institutions and bigger investors will use it, and it'll just grow. It's like a snowball rolling downhill, and they all want to be that one. That's again why this is so fascinating. There can only be one volume beast. That one is set for life. It has immunity from the Vanguard effect. It never has to lower its fees ever. Because when you're that liquid, people don't really care what you charge because they're going in and out. So GLD to this day is still 40 basis points. That's what it was day one. So you have pricing power, and that is beautiful.
Yeah, so to their point is that this kind of controls the market. And I think that in itself is a major deal, because the opportunity here could be absolutely unbelievable in terms of acquiring new assets under management for someone like a BlackRock. Continuing to grow their 9 trillion AUM would be unbelievable. And this could be one of the draws that they're looking, because remember, a 1 or 2% move on that is pretty significant. So no profit is really the question, is how does this play out over time? And what do these fees look like once you get to critical mass in terms of the amount of money that's being invested? Listen to this clip of what they were talking about in terms of profits.
Yeah, I mean, you got to realize in the ETF industry, like some of these guys might not be expecting to make any profit on this. That's what Caitlin doesn't understand. The ETF industry is extremely low margin for the most part on the lower ends of AUM. So if you can get to tens of billions of dollars, they can afford to offer these products at those fees, right? So it's all about a scale thing, and they need to get off the ground first, and they want to get to that asset and liquidity scale as quickly as possible in order to be profitable. But all these guys are offering 0% fees to start off. Like it's not because they're going to do some super sketchy things with the Bitcoin or what have you. They're doing it because they're trying to compete in the ETF Terradome and what advisors are used to competing at and what they're used to getting. And that's just how things operate in the ETF world. It's not that they're like, they're going to find other ways to eke out returns or do sketchy stuff. This is just them competing. And you could honestly, some of these guys are probably going to be losing money on these things for a while. We know for a fact they have fee waivers on these things for 6 months when they launch. Those people are going to be de facto losing money. It's a marketing ploy. They're trying to get people in, so the long term it can be a profitable investment for them.
All right, so I would agree with James on that. It does. I mean, this is kind of like a price leader in the retail industry, but the point being is that the guy with the biggest bag is going to win at the end. And when you look at the size capacity of what this bag may look like, because right now, Bitcoin moving in on $1 trillion, most likely $1 trillion market value. What does this look like when it's at the size of gold at 10, 11, 12 to 15 trillion? That's where I think these ETFs really are playing a long game here. Listen in further around profitability. This was in reference to BlackRock's positioning and why this is such an important ETF for him. Listen in.
An ETF, if you're the one, you're looking at a top 5 or 10 revenue generating ETF, depending on where BlackRock prices it. But let's say BlackRock is modest at 40 basis points like GLD. I mean, this could be a revenue generator for a long time. And remember, ESG did not work out for them. This was one of their big initiatives. It's kind of, I can't say it totally is extinct or anything, but it was a flop. I think BlackRock is a company that's publicly traded, so they have a ticker, and they have to keep up revenue because they've got shareholders who are different than their investors. Those shareholders want revenue. So they've got to find new ways to generate revenue, because selling broad-based ETFs and competing with Vanguard doesn't make much money. Like I said, Vanguard has priced almost everything down to zero. And Bitcoin is what we call a VFZ, a Vanguard-free zone. Yeah. And this looks like a growth area. And I think they see it in their eyes as a win-win.
Look at the annual revenue here with BlackRock, ranging around between 10 and 50 revenue, 10 and 50 billion. So you look at that in comparison to what is happening within the markets overall. I mean, this is a major opportunity for BlackRock in terms of revenue. Like he mentioned, Eric mentioned, could be one of the top performing ETFs. If it's in the top 5 or top 10, I mean, can you imagine the impact that's going to have on not only the Bitcoin market, but just in general, what it could have on the crypto markets? Let's just take a look and give an example of what is going on with ETH. ETH is sitting on right now at 2.5 billion annualized profits. So this is another one that has also big upside opportunity just because of this. And imagine what happens with an ETH ETF if that starts to play in it. So you can see how these players, these market players, look at these assets and understand these are new revenue generators for them in a big way, especially after what just happened with BlackRock getting a little bit of egg on their face on the ESG front. So I would agree with Eric. These are going to be big revenue opportunities for them. It's only going to make their clients much more happy. But more importantly, it's going to give them a better position overall in the, the overall monetary system. I think when you look at just financial markets and how we'll see a lot of this new investment coming into crypto. Further into this, I want to go to another clip that talks a little bit about whether or not Grayscale could be a winner here or not. Listen in.
I'll just give you Grayscale is going to be really hard to defeat because they're $30 billion in assets right now. They are extremely liquid in GBTC, and liquidity is hard to steal. So traders are still going to trade GBTC most likely, and it might be a slow bleed from that product over time because the fees are so high. And then you can't count BlackRock and Fidelity out.
All right, so I'm kind of on the other side of that position with James. And I only look at it in the sense that we know that, yes, Grayscale has been seeing, fewer and fewer percentage points in terms of their positioning overall within the Grayscale Trust. But you look at their fees, they're at like 1.5. So this is going to be considerably more expensive for someone. Now, you could be locked in there, and that is a problem if it's a tax situation that you're dealing with in terms of a loss harvest or something like that, you'd have to occur. I don't know that necessarily would be the case if we see Bitcoin on a massive move and these fees stay at 1.5. Now, could they get more competitive? Yeah, they could. Now, that will be the question, is whether or not they do to keep up with kind of the Joneses here. But could major, liquidity providers really simply say, all right, this is not really the place for us, and now we have another option? So I don't know. It's going to be a really intriguing summer coming up as we see this ETF grow. All right, further into it, let's talk about how this could potentially grow over time. This is a tweet right here. 11 ETFs are fighting for market share. This is one of the biggest financial market events ever, and you're gonna do it one or really 3 ways: advertising, fees, or liquidity. I think Grayscale wins the liquidity battle. Fees looks like it's still up for, grabs. And then there's going to be an advertising winner, which may shift the tables a little bit. So remember, we have something pretty big happening soon too. And if you look at liquidity, BlackRock has more than $2 billion lined up. That's, still small in comparison to others. Spot ETF in the first week, adding players like 10 billion buy orders on the table. This could be a very, very big opportunity around maybe selling the news. I'd love to get you guys' opinion though. Do you think that is the event that is underway right now? Is this something where we do see a pump and this immediate adjustment? Because that was originally my thesis, is that we would most likely see a fairly good jump into the market and an immediate recoil and retracement. I'm not feeling quite that way right now, just because of the amount of conviction I'm seeing from traditional investment managers, which is different than what we've seen in the past. So that's a big one right there. But think about the other advertising side of this. You got the Super Bowl lining up here on February 11th. This is the biggest marketing event ever. I'm imagining someone is going to win that with an ETF ad. So expect that on Sunday, February 11th, most likely. It'd be fun to see the ads coming out. I want to go to this last clip because this is talking about what Bitcoin's prediction could be, price prediction, over the next 12 months. Listen in.
Your 1 year and 5 year price target for Bitcoin?
I think in the next 12 months, something over 100,000, maybe 150,000. And, in the next 5 years, again, there's a finite supply, and now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 would be potentially achievable.
All right, so there you see it. Very interesting that mainstream Wall Street is looking at these kinds of growth numbers on Bitcoin. And I think if you look at the market over yesterday, you saw that immediate hit right there. We're on the 4-hour, which took Bitcoin right up to around 47K and a little bit of retracement over the last 24. So interesting to see a little bit of movement right now. I think this is all, again, lining up for an approval this afternoon at 5 p.m. So stick around for that. We'll try to cover some of that as quickly as we can. And of course, if you're not following me out there on X, do it. It's just @PaulBaron. We'll catch you next time right here on TechPath.